Thanks a lot for that, Vinny. Well, let's focus on Coal India. Coal India has underperformed the Nifty in the past 6 months, and its operational performance, both for December as well as year to date, well, it's been weakish, with only marginal growth on production as well as on the dispatches front. Axis Capital, well, they have come out with a note. They acknowledge softness in offtake and they expect just around 2.5% growth in FY25 on volumes. But that moves to around 6% growth in the next two fiscals, as they are expecting there will be some kind of improvement in power demand. So they've gone ahead, they've upgraded the stock to buy from add, but they've cut the target price by roughly around 10%. This is because they've trimmed down their volume estimates, which has resulted in a 5 to around 7% cut in the EBITDA projections. The key reason for their bullishness is attractive valuations. So Coal India, remember, according to their estimates, it trades at around 7 times odd PE, 4.5 times EV per EBITDA, and 7% dividend yield. So valuations, they believe, can support the stock. Now, the reason for the soft operational performance for Coal India this year so far has been the weaker power demand. That's just up around 4% year to date. And also the share of captive coal in India's total coal production. That's risen to around 18.5% from around 15.5% in FY24. Now, Axis Capital says that the EBITDA growth will be muted, but the free cash flows are expected to be robust at around 15,000 crores per annum, even though earnings growth will be muted and also they have elevated capex. So put everything together, Coal India, which if you pull up a chart of Coal India as well as the Nifty in the last 6 months, you'll see that it's been a relative underperformer. However, some part of the street like Axis Capital believes that things could look up from here on for them, and maybe in fact at these sort of valuations, Coal India could get some kind of support. So we'll keep an eye on this, whether it'll shine back in 2025.